The following podcast is intended to be of a general nature, will not be suitable for everyone, and should not be treated as a specific recommendation. We recommend taking professional advice before entering into any obligation or transaction. The information provided does not constitute investment advice and should not be relied on as such. It should not be considered a solicitation to buy or offer to sell a security.
Right, welcome back to the Beyond the Boardroom podcast, episode 10. Now, you notice that Matthew has significantly changed, and that is because we are joined by Chris here from Larking Gowen. Chris, we're going to talk a little bit about the tax year end, a bit of talk about accountants in general, and maybe bust a few myths that people think of historically around accountancy and the importance of doing it. But first of all, welcome to the podcast.
Thank you.
No, it's one of these things that we always talk about from a financial point of view, but I think it's important for people to understand sometimes the difference in specifically around the kind of professional services where you've got accountants, you've got IFAs, you've got solicitors, and people sometimes get confused about where things overlap and whose responsibility it is for kind of different areas. So would you mind kind of first of all giving a bit of a kind of brief overview of what it is an accountant does, or in your specific case anyway?
Yeah, okay. So I'm a tax advisor as opposed to an accountant.
Mm-hmm.
So my focus is around the tax implications of a particular transaction, or looking at the general compliance obligations that a client has. So my role would be to work with financial advisors and solicitors and make sure that, one, the client is tax compliant, and two, if we can structure the transaction in a particular way that works better for tax or works better for the situation for the client and those involved with the transaction. So if you were, pick an example, if you were looking at setting up a trust, for example, and you wanted particular individuals involved, we can help on that side of things and make sure that the transaction is structured from a tax point of view in the best way.
Okay, and how did you kind of get into being a tax advisor? Or was it something you always said at school, I want to go down that route, or was it something that you kind of found?
No, not particularly. So I wanted to originally go down the IT route. It came to A-level time, and I needed to pick 3 A-levels. Had the 2 that I knew I wanted to do, and thought, oh, well, I'll just pick accountancy, that'll do. And then, to be honest, that was my preferred A-level. So always had it in my mind that I would, from that point, want to be an accountant. Then got involved in the industry and realised that you could just do tax. Ended up doing tax and enjoying it. The bit I like about tax is it's always changing. So there's always something new to learn, and there's always different nuances on different clients that you might not have come across before. So it gives you the opportunity to sort of delve into it and really understand the tax legislation.
Oh, amazing. And obviously you're working at Larking Gowen now. Would you mind kind of giving a bit of a synopsis as to who Larking Gowen are and a bit about them as a firm?
Yeah, so we're a general practice firm, providing services from audit accountancy all the way through payroll, corporation tax, private client, which is the area I'm involved with. So we are a mid-sized firm, and we like to market ourselves as being large enough to be able to offer the sort of really detailed advice that you'd get from a national firm, whilst being small enough for the advice that we give to be sort of partner-led and really client-focused.
Yeah, it sounds a lot like us in a similar way with regards to the type of industries as well, where there's a lot of consolidation, there's a lot of big national firms kind of coming into the regional space and working their way in. And I'm right in thinking Larking Gowen is still independent in that sense, isn't it?
Yeah, and we are fiercely independent. That is, that is definitely one of
we've coined the term, or Matthew's coined the term, violently independent, and very much fighting the flag for why having an independent voice is equally as important as having large multinational, but actually having an independent one there that can give you the advice with maybe less of the kind of foot on the back of the neck as such that comes from ownership from up on high. So no, that's really interesting. So what kind of led you to working at Larking Gowen and particularly this kind of part of the world, and have you got kind of an area of it that stands out to you as like, oh, I really enjoy this part of the job the most?
Yeah, I mean, the bit I enjoy the most, to be honest, is the clients. So working in private client, you've got very different clients coming through the door with very different circumstances. So the bit I enjoy is client comes to you with a very complex situation, very specific to them, and you devise a plan to solve the problem they've got based on their particular circumstances. That's the bit I enjoy about the job.
Okay, and do you find that, obviously, I know one of the things we talk about is kind of why people need an accountant. Do you find that there's a particular reason why people tend to come to you more often than not, or more to a reason why people don't possibly come and see an accountant when they really should?
I think that in my experience, clients don't come to us initially, probably because of the concern around costing, I would imagine. There's lots of transactions I've been involved with at the back end, possibly a little bit too late, where had they come to us at the beginning, we might have been able to structure things differently and generated a better outcome, which the tax saving of that better outcome would have been far more significant than any fee that we would have charged.
Yeah, I think that is always one of the big kind of myths or thing around accountancy, isn't it? And people get put off by the hypothetical cost before they've actually even spoken to anyone. I know it's something that we have the same situation, that people go, oh, well, I could talk to you, but it's going to cost me loads of money. Actually, it doesn't. And we always say that actually one conversation could save you 40% on your inheritance tax, because you might have a really easy solution. Yeah. And that money that you save far exceeds the money that we'd ever receive in a lot of cases.
Yeah, exactly. And our structure is, the client's got a transaction coming up and they want to discuss it with us. If they're a non-client, we offer a free consultation. So if we have the meeting, understand the situation, and realise actually we can't really add any value here, then that's the end of the discussion.
No harm, no foul.
No, exactly, yeah.
But it's for the client. They come out with a bit more education on the situation. They know what they're doing is the right thing, and they're going, because, like you say, tax is one of these things that is constantly changing, the kind of monster under the bed that everyone is worried about, but they don't quite know how to deal with it. And actually, so having someone that's specialised in those areas, kind of from your sense, is there a kind of a particular client that you can think of that actually really benefited from coming and speaking to you compared to where they were beforehand?
Yeah, I mean, there's lots of situations where that has happened. I think the biggest area for me would be inheritance tax, and you have a client that has done no planning. They come through the door. You do a back of the envelope. This is what your current exposure to inheritance tax is. Discuss with them the options available. You can kind of see from family structures and the discussions where they might want to be, and then at the end of it, you can say, well, we started with a potential liability up here, and we're now down here, and we've saved you lots of tax potentially. So that's good.
No, and I think you're right. Inheritance tax is one of those things. It's the talking point for most people nowadays, just because of recent policy changes from the government, but also I think it's sparking a lot of people to have conversations with family members that they maybe had avoided. I think money is still very much a kind of taboo subject for a lot of people, a lot of families. They don't want to talk about how much money they have, particularly with children. Sometimes it's a case of, I don't want them to know how much money I have, because they might take it easy and they might not push themselves to be successful, and they might just rely on what I have, and I completely understand that. But from an inheritance tax point of view, actually having a kind of whole family approach to planning can have a massive impact. I know it's something that we do now. We talk to clients and see when they're comfortable to work with them and work with their family, because you might be looking at 3 generations of a family. Actually, when it comes to inheritance tax planning, if you've got grandma and grandpa, for example, and you've got grandchildren in the mix as well, people are looking at, how can I get money out of my estate? I know school fees is a big talking point, or gifting out of regular expenditure, and how you're documenting everything is a whole family issue now, rather than just a single person coming and seeing you for inheritance tax advice.
Yeah, I also think you touch on a good point there in terms of educating the next generation in terms of managing money. I've seen a situation where the children were protected essentially from everything because there was sufficient money there. So why would you burden them? Then, as they've got older, they're now having to get involved with it, and it's really alien to them.
Yeah.
I think a non-tax point, but getting everybody involved and understanding it, I think is really good.
Yeah, I mean, it's something that I know for us in particular. Obviously, we launched our Thrive by 35 campaign last summer, with that being one of the key things. Obviously, it's designed there to help under 35-year-olds get on the housing ladder, but a big part of it is also education. It's going through, it's explaining to people about budgeting, about personal finances, about what investment vehicles there are, understanding what kind of taxes are involved, inheritance tax, and kind of hoping to open up those conversations. So I had a meeting yesterday where there was 6 people in, and the average age was about 22. And they all kind of went away and said, and that was actually really useful. I hadn't learnt about it at school. It's not something that's really discussed at the office, so I don't really know about it. I'm sure it's conversations my parents are having, but they don't feel like they can involve me in those conversations because I'm 22. Whereas now, hopefully, I can go home and I can at least say, oh, we had a guy that came into work today and talked about inheritance tax, talked about ISAs and LISAs and these types of things. And that might be a bit of a kind of a flip switch for those people to go, well, maybe you are old enough to start having those conversations. And I think as money is very tight for a lot of people and savings are more difficult and the bank of mum and dad is becoming more and more prevalent in terms of buying a first-time house, I think financial education, if you can understand about budgeting and putting money away and putting money in savings from 18, if you're not looking at buying a house until you're 28, if you can get 10 years of saving for a deposit under your belt and doing it the right way, then that eliminates a massive amount of hardship for a lot of people. But obviously we talk about inheritance tax, a big one, but more upcoming for us at the minute, obviously at the time of filming this, we're kind of at the middle of March, two-thirds of the way through March, is obviously the tax year end that's coming up. Yeah. So, I mean, for those people who maybe don't understand kind of what the tax year end means, are you able to kind of give a bit of an explanation, just a quick?
Yeah, I mean, quite simply, it's the last month or so leading into the end of the tax year. So it's a good time to review your position and decide whether you could do anything to improve it. So it's a good time to, as I say, look at your income levels. Should we be making any pension contributions to get us down below some limits? The obvious one is the £100,000 to £125,000. If your income's in that bracket, your marginal rate's 60%. So if you haven't maxed out your annual allowance for your pension, it's probably a good idea to do it. But even if you're a high rate taxpayer, for tax purposes, making your pension contribution just extends your basic rate band, so saves you some tax at source, and obviously enables you to retire when you get there. I mean, you've got to be making some pension contributions.
Yeah, I think it's one of those things, isn't it? So I think after the first budget that came out, where pensions obviously got brought into inheritance tax from next April, so April 2027 at this point, a lot of people went, avoiding pensions. But pensions still have a big part to play in terms of retirement planning, maybe just not estate planning in the long term.
Yeah, exactly that. So you still need a pension if you're looking to retire, unless you're massively wealthy and you've got other assets.
Yeah.
But yes, you're right. The estate planning will change from April 27. I mean, broadly, the advice is still exempt at the moment, so you're okay for now. But it definitely will need reviewing at some point. Yeah,
and you also talk about taking a tax-free allowance with regards to utilising like ISAs. So you've got your £20,000 there, making sure you're making the most of that. Again, whilst at the minute they haven't changed the ruling on how much you can put into which types of ISAs. Obviously, you've still got, if you're a young person, you've got your that's saving for a house, you might be using £4,000 for your lifetime ISA. You've still got that £16,000 to use for stocks and shares or cash ISAs. So I know in the future they're looking at reducing the cash ISA allowance for under 65-year-olds. But again, That doesn't happen yet, so the advice as it stands is you still have those options. So to utilise those. So are you kind of working with families then to make sure that they're all utilising their pension contributions, their ISA allowances, and what's the kind of conversations around that for most people?
Yeah, I mean, as a tax advisor, we can't provide financial advice. So
No.
the area around pension contributions and ISAs does get a little bit tricky in terms of we can advise on what the optimum, certainly on the pension side, what the optimum position is from a tax point of view, and it would be a good idea from a tax point of view to contribute to your ISA, because then any interest and return is outside of the tax environment, and then it would be for the financial advisor to step in and advise where to put that money in the pension fund and in the ISA. So I guess that's where we...
Yeah, that's the overlap, and I think that's it as well. I think before the days where, again, I mentioned the kind of the three big ones, accountants, solicitors, IFAs, where people had initially maybe kind of had blinders on in the sense of, this is the thing I'm looking at, that's what I'm going to do, focus on, and then after that, move on. Whereas now, I think people are having to have kind of that whole of picture. So, I mean, I know from our point of view, we overlap a lot more with solicitors in terms of making sure clients have got wills, lasting powers of attorney, obviously business powers of attorney, making sure these things are all in place so that when we're dealing with a client, we know exactly who we're dealing with on the opposite sides, accountants as well, so that to make sure the advice that we're giving is understood across all the platforms as well, and in case of if anything needs to change, to make sure that that person's position is understood as possible, and making sure that, again, the accountant is aware of any investments that they're doing that might implicate their tax changes. The solicitor understands if they've set up another investment, actually that needs to be documented somewhere, because that might be left to somebody in the will or gifted to someone, or however it needs to be done, but making sure everything's kind of discussed across all fronts. But so do you, kind of moving on then to where you find it now, what's kind of one thing that you would wish more people knew about your role or kind of accountants in general, that maybe is a kind of an urban legend or a bit of a myth that people kind of take for as it is at the moment?
I think, I'm not sure about urban myth, but I think the biggest takeaway for me would be speak to your accountant before you enter into a transaction, or if you're receiving, I don't know, let's say a large inheritance, is there something we could do up front, or structure the transaction in a particular way to result in a better tax outcome? I'm always one for not letting the commercial tail wag the dog. Yeah. So let's not change what we want to achieve because of tax. Yeah. But if we can achieve what you want to achieve whilst structuring it well for tax, we might end up in a better net position as a result.
Okay, and so is there a best time for someone to consult an accountant, or is it just a case of just the process of going out and doing it is the first and most important step?
Yeah, I think it's this is the situation I'm about to embark on. Yeah. Can we have a conversation about it to establish whether there is a different way of doing it?
Like you say, to make sure you don't fire the starting gun first and then try and catch up. And,
exactly.
No, that makes a lot of sense. Well, Chris, thank you so much for coming on. Hopefully people find that useful and kind of get a bit more of an understanding as to the difference, again, between just an accountant, tax advisors, but also the variety of things that an accountancy firm might look after, rather than people might think of it just as kind of their year-end tax or doing audits. Actually, there's a whole stratosphere of things that, especially Larking Gowen, particularly in this part of the world, are involved in. And it's great to see that you guys are very kind of seen around, particularly where we are in Suffolk and East Anglia, with offices kind of in Ipswich, Colchester, Norwich. So it's brilliant to see that you're kind of covering those areas and obviously doing a lot of work with, again, a lot of our clients overlapping as well, have lots of positive things to say. So thank you so much for joining us and kind of going through a little bit about the tax year end. if you want to find out more, again, about your personal tax positions, we'll leave Chris's information in the description. So please do feel free to contact him, contact Larking Gowen. Like I say, very, very, very trusted. And thank you again for coming on. And Chris, is there anything you kind of want to leave us with to end on?
It's just the message of speak to your accountant first, I think is the message.
There you go. You heard it here first. Speak to your accountant first. Chris, thank you so much.
Thanks for having me.
Take care.
Thanks.